You are listening to ChartingWealth.com for Thursday, the 21st of July, 2016. Want to welcome you to the broadcast. We bring this to you every day to update you on what's going on in the markets for particular ETFs. The first is the overall market IYY, which we're going to jump into momentarily. Then the S&P 500, represented by SPY. Then the NASDAQ 100 with QQQ, or the Qs, the cubes as we call it. And then finally GLD, which is gold. Now let's jump right into what's going on with the total market IYY. Total market up 0.57% for the day, so just over 0.5%. We continue to see this market climb. We crossed over going up on our MACD, that is the moving average convergence divergence indicator. It's the number one indicator we use at Charting Wealth. We keep everything as simple as possible using that Occam's razor principle. We want it to be as simple as possible, but not simpler, as Einstein said. So we had a crossover going up on the 11th of July. We then had the derivative oscillator, which is another indicator we look at, not dispositive of what we do, but something we look at. It crossed over on the 13th, and we've seen the market move up. Some indecision at the candle that closed yesterday, the 19th, and again, we're recording this the evening of the 20th after the market closed for the 21st. But that candle, two-day candle that closed on the 19th, lots of indecision there. However, the decision in the market was to go up. So the first day of our two-day candle that started being drawn on the 20th of July is an up candle. It's an up green open box, which with the Heiken Ashi type of candlesticks we use, and you want to know what these terms are about, go to chartingwealth.com. We've got lots of good training in there. Heiken Ashi candlesticks, we have a good training, came out just a few weeks ago. Take you about 10 minutes to listen to it, and you'll learn about everything you need to know about Heiken Ashi candlesticks and how to use them. What we see is a green open box with a wick on top, which means strong up movement. That's what you need to know. Now, if we look intraday, what do we see going on? Well, we see that the market pulled back on the 19th, crossed over going down, which is what we want to see. Then the market moved over going up, at least as far as the candlesticks went, on the morning of the 20th and the afternoon of the 20th, but we don't yet have a crossover going back up, so we don't have a confirmed up move. Now, some of you attempting to use the candlesticks and such looked at the candlesticks looking for down moves and then up moves. You may have jumped in sometime around the 18th, or again may have jumped in this morning, but again, we don't have a confirmed end of the backup. We still have the blue signal, well, the blue MACD below the red signal line. We do have the derivative oscillator started going positive again, so there may be a crossover yet. When that occurs, then you may have a jumping in point for an up move on the total market. Let's go back to our two-day chart. Going to take a quick look at the S&P 500. It wasn't up as much as the total market during the course of the day. It was up 0.42% for the day. Again, looks somewhat similar to the total market. Crossed over going up on the MACD back on the 11th, and then again on the 13th, derivative oscillator started moving up. Some indecision with that candle again that closed on the 19th, but then resumed upward movement on the 20th. If we look at the 4-hour chart, looks similar. We continue to see up movement in the morning and the afternoon on the 20th. Our backup is underway. We still don't have a crossover going yet, but when that does happen, and it could happen tomorrow on the 21st when you're listening to this broadcast or you're using it to trade or invest, again, not in real money. We are not a stock calling service. We are an education firm. We want you to use your virtual account. Go to any online broker, sign up, become a virtual millionaire. Practice this. When you get good at it, then you can make up your own decisions. We don't give you trading advice, but we do see the possibility for getting into a virtual trade if we have a crossover going up. Remember, this is an election year. If you're a follower of the Stock Traders Almanac for 2016, I get it every year. It's the best $50 or so that I spend with the best lessons you're ever going to find. Yale and Jeff Hirsch do a great job. It's one of the few books we recommend. We recommend it highly. When you get it, read the section on presidential election cycle. It is an amazing thing and can be very helpful to you. Okay, so we're confirmed up move on the big chart. We have a backup going right now. All right, next thing we're going to do is we're going to go to the 2-day chart and we're going to move on to the Qs. What's going on the Qs? Well, it was up 1.17% for the day. That is the Qs. What do we see going on there? We have a crossover going up. On the 11th, we saw the derivative oscillator move up. At the same time, we saw the MACD cross over. We saw, again, upward movement on all the candles going up since then. Actually, the candle that first started forming today is up strongly also. If we look intraday, what do we see on the 4-hour chart? We see that, again, it's above the 2-day trend line. Strong up movement in the morning and in the afternoon. And for those of you who are following it, hopefully you jumped in the afternoon, possibly. We had that pullback short-lived, and then it crossed back over going up. Either you got in the morning or in the afternoon, but we're positive on both the MACD and the derivative oscillator. Again, that pullback has already reversed itself. Hopefully you jumped in on your virtual trade and you're already up. Again, it pays dividends to pay attention to what's going on these charts. Again, Q's up for the day, 1.17%. All right, lastly, let's go back to our 2-day chart. Let's take a look at gold. Gold was down bigger than any of the other charts were up. Gold down 1.43% for the day, crossed over going down, confirmed down move on gold. And we also saw the derivative oscillator flip over at the same time. That means strong down movement, and we see a strong down candle, a red filled in box with a down wick. So strong confirmed down movement on gold. See what we see on our intraday chart, and we see we were already confirmed down move on gold on the 4-hour chart, and it's just continued to move down. No pullback there for a jumping in point. Well, folks, that is where we ended up the market on the 20th of July as we go into Thursday the 21st. Again, be alert. See if there are any points to be able to jump in on something like the SPY, and you might want to look at how the market's shaping up if you've not already gotten in the Qs. Maybe the getting will still be good. We will just have to see. Again, nothing yet in gold as it continues to move down as the markets move up. If you want to know what it is we do here, we encourage you to go to the website, chartingwealth.com. Sign up for the newsletter. You will get with it every day all sorts of great things. You will get, of course, the videos that we put out daily, plus the weekly review and forecast that we do over the weekends and provide to you so you know what's going to go on throughout the course of the new week and what moved the market news-wise in the last week. We're not big on news and media. We're big on looking at the charts, but we like to have an idea as to things that might move the market, such as Fed meetings or you name it. Different news that's going to be released that can really affect things. Other than that, we don't listen to the talking heads. We don't pay attention to that. We pay attention to the charts because the charts are what really tell you what's going on. If you appreciate what we do, please go to iTunes, subscribe, but more than that, give us a 5-star rating, say something nice about us. Those subscriptions and those nice things help us in the metrics. You've already made us as high as number 7 worldwide as far as stock market podcasting goes. We very much appreciate that, and we just like to hear from you. You can write to us any day at chartingwealth.com. All you've got to do is reach out to us. You can find us on Facebook, Twitter, Instagram, YouTube. We are there for you, and we appreciate you being there for us. One last thing we ask, please go to YouTube and subscribe to our channel. We're getting very close to hitting that 1,000 subscribers. Once we do that, guess what that means? That means, my friends, that we'll be able to bring you proprietary broadcasts to our subscriber base. I know thousands listen to us every week, but it's having that 1,000 subscribers that we need. Thank you so much again. We appreciate you. God bless. Hope this training's helping you. We'd love to hear from you at chartingwealth.com.